Live, the Herald's Politics Podcast. My name is Andrew Limerick and I am the political editor of the Herald. On this week's episode, we are talking about the budget, which is coming up in a couple of weeks. And we are talking about it because Rachel Reeves stood up in Downing Street on Tuesday morning and told us that we're all going to have to do our bit.
As I take my decisions on both tax and spend, I will do what is necessary to protect families from high inflation and interest rates, to protect our public services from a return to austerity, and to ensure that the economy that we hand down to future generations is secure, with debt under control. If we are to build the future of Britain together, we will all have to contribute to that effort. Each of us must do our bit for the security of our country and the brightness of its future.
So to discuss what the Chancellor said or what the Chancellor didn't say, I'm joined by João Sousa from the Fraser of Allander Institute, or as I think we as journalists have to say, the respected Fraser of Allander Institute. That's to give you your full official title. But this was unusual, wasn't it? The Chancellor standing up for this. I mean, normally we get kite flying, we get sort of, hints and sources and all that sort of stuff. But the Chancellor herself to stand up in the Treasury 2 weeks before the budget and set the scene, what does that tell us?
It's a really unusual step. It's something that we, as you said, we don't often see this kind of kite flying from the Chancellor themselves. We usually see it from anonymous briefing, or they call secret squirrel briefings in the Treasury. It's all very arcane names for these kinds of things. But yes, we usually hear some leaked stories in the press, and then we kind of see the Chancellor doing the first statement on the day of the budget. It's usually pretty closely guarded, so it was very unusual. I think to some extent it is a reflection of a lot of the nervousness that the Chancellor has, and everyone in the Treasury, I think, since the mini-budget episode when lots of changes weren't trailed in advance, and now everyone seems to think that the answer is to trail everything in advance. Although it was quite curious to see the Chancellor saying, everyone understood their bit, but they're not saying what the bit was going to be. So that was another unusual bit of this.
And she was asked repeatedly by journalists, and then later on in the day in the Commons during Treasury questions and another interview at night, again and again, if she was going to raise taxes, because Labour said in their manifesto ahead of last year's election that they would not raise taxes. And she didn't rule it out. She didn't say no, which, suggests that the answer is yes.
Yes, certainly she's trying to keep us guessing as to whether that is, which again is an unusual step, because if you're going to come out and say that everyone's going to have to contribute to this, but you don't kind of spell it out, one of the potential consequences is that you end up with lots of speculation over the next 3 weeks as to what might happen. So to me, it's not obvious that the clarity that might have been aimed for by the Chancellor and her team is really there. Like, we're left to pick up the pieces and try and interpret between the lines. But really, do we know anything new that we didn't know before Tuesday? It's pretty unclear, really.
I mean, she was, so the Treasury called the speech a scene setter. I mean, did she set the scene? I mean, because, this is the problem. She's going to have to raise taxes, isn't she?
We think so. We think she's definitely going to have to raise taxes in some form. The question is whether she's going to move on the rates, or whether she's going to try and do something that kind of changes thresholds. We are pretty much expecting her to extend the freeze to thresholds. Obviously, some of it applies in Scotland, some doesn't. But the freezes in personal tax thresholds, we think, are here to stay for a bit longer, and that will be announced. There's some talk about whether the higher rate threshold in England, Wales and Northern Ireland might be reduced, which is something that would raise quite a bit of money, but that would essentially be raising taxes, right? Because you have people are talking about around £4,000 of income in which, instead of being due 20 pence on the pound, it would be 40 pence. So that's a big increase in taxes for those people. Or is she actually going to just raise the rates? But ultimately, if you don't touch any of the big taxes, then you can raise significant amounts of revenue 2/3 of revenues come from the three big taxes: national insurance, income tax, and VAT, and they're paid by the most people, which means that each person doesn't actually pay. It's relatively well distributed. Obviously, the people at the top of the income distribution pay a lot more, which is how a progressive tax system works. But it's paid by lots and lots of people. Whereas last year, a lot of the increase in tax, apart from employer national insurance, were kind of like things like the farm inheritance changes, which are paid by few people, and those people pay a lot more, and therefore they have a lot of incentive to be very critical about it.
I mean, one suggestion was that she could cut national insurance by 2. She could put up income tax by 2p, but cut national insurance by 2p. So almost the sort of feeling of a net zero tax hike.
That would be true for employees, but not for the people who don't have employee income, who would pay the higher rate but not have any cuts. It could be actually quite a smart measure in terms of reducing. So at the moment we have a relatively large wedge between people who are in employee jobs of working age and people who are either self-employed or people who are above state pension age. In that you have people in employee jobs of working age have to pay national insurance as well at the higher rate. So, last year the Chancellor kind of increased the cost of employment by increasing employer national insurance contributions. This would be a way of reducing that wedge. So that could be a smart idea and raise a few £1 billion. I don't think it by itself is going to solve the issue, but it would certainly be something that would make the tax system more efficient.
Now, obviously, income tax mostly devolved to the Scottish Government, but if the Chancellor does hike income tax for south of the border, that has an impact up here, doesn't it?
Absolutely.
Explain the fiscal framework to us.
It does have an impact. So the Scottish Government, as you said, income tax is mostly devolved. We say that it's devolved, but savings and dividends are still paid at UK rates. But those are relatively few people pay large amounts on that. But the Scottish Government only gets to keep the difference between how much is collected and a deduction that is essentially trying to proxy how much would have been raised in Scotland in the absence of devolution. So in the absence of devolution, we would be paying UK-wide rates. If those go up, then that deduction gets bigger. And so the net amount gets smaller. It's important to note that it's not just if the rates go up, it's if receipts go up at all. So even if the rates weren't increased, but the thresholds were cut, that would still raise more revenue at UK government level. Therefore, the deduction would still get bigger by different amounts, but it would still get bigger. So that issue isn't solved by just not changing the rates.
So there was a paper, you guys produced a paper last week which suggested that it could, if Rachel Reeves does increase income tax, it could leave John Swinney and Shona Robison with a bit of a headache, a bit of a gap.
So it's hard to know exactly how much it will be because we're using published numbers from HMRC. The forecast that the OBR will put out will be different. It might be higher, it might be lower. And there's some further complications on the exact amounts, but we think that for a 1p increase on the basic rate at UK level, that could cut the Scottish budget by as much as £500 million. And 2p would be double that, so around £1 billion. If Rachel Reeves chooses to hike the higher rate of income tax, the deduction is smaller because it just raises less money.
Sure. So what does that mean for the Scottish Government then? Because their budget's I think the Scottish Government budget's now in January, so...
It's a really tricky position, right? Because the Scottish Government has had a policy of having higher rates of income tax on higher incomes. So do they choose to maintain that differential? That would imply increasing income tax rates in line with whatever the UK government does. Or do they say, no, our tax policy is what we want it to be, and therefore we have to make do with the funding that we have, which would be smaller than they were anticipating. So perhaps, if you don't raise taxes, then you have to cut spending because the Scottish government's not allowed to borrow for day-to-day purposes in any year. So that's another difference, is that Rachel Reeves' rule is that she wants to be in balance by 29-30.
Yeah.
The Scottish Government has to be in balance this year and next and in every year on the equivalent of the current budget. So it's very tricky. They could decide, for example, to not go the whole way.
Uh-huh.
They could try and split the difference. If there were to be a 2p increase, they might put 1p and then cut spending by the rest. It's up to them. But it's not a comfortable position to be in, right? Because essentially the fiscal framework is not, it's complicated. It's hard to explain to taxpayers why a change in another bit of the UK has such a big effect, but that might be what they have to do. And it's the fiscal framework that exists as it is. It's been signed by both parties to the agreement, so you kind of have to live with it. But it's not comfortable in any way now.
Negotiated, of course, by one Mr. John Swinney.
Yes, originally, yes, and it was reviewed in 2023 as well. So it's not that long since they last had a chance to put forward any changes or any demands. And as I said, both parties signed it. So it's hard to say, that this wasn't foreseen. It's been known for a while. The First Minister was saying before the general election, the UK government should follow Scotland's lead in terms of increasing income taxes. Well, that would be what we've just been discussing would be the implication of that, which again doesn't lead you to a particularly comfortable place.
So John Swinney today was asked, during First Minister's questions, and when he was speaking to journalists afterwards, if he would raise income tax. Previously, he's ruled it out, but today again he's doing that Rachel Reeves thing of not saying no, which again is leading to speculation that we could be in for tax hikes. The Scottish Government, they've we know the accounts last week presented a £1 billion underspend, but the auditor was pretty it was a good thing we can say scathing about their plans for the future, because they have effectively a £5 billion black hole in the finances coming up.
Yes, absolutely. So there's the £1 billion in the spend. It's kind of like something that's already happened.
Yeah.
But it's not planned to happen in every year. So they cannot really bank on that, and there's all sorts of reasons why I might say that it's not necessarily the most efficient way of running things. But the kind of the big kind of funding gap that they have is very much there, and it's particularly difficult to see how kind of everything can be maintained at the current levels of increase. So when in the medium-term financial strategy, the Cabinet Secretary, Shona Robison, kind of outlined what she was assuming for that to be the case. And that assumes growth of 4% a year in real terms in the health service, and just maintaining everything else at the same level of real term spending.
Yeah.
That on top of also the social security system, which is projected to cost more over time. That can't all be true, because unless you're going to raise another £2.5 billion in tax revenue by 29-30, they're going to have to face the fact that they have to make some prioritization decisions that are not very comfortable for them to do. So I think that's kind of like the overarching situation for the Scottish Government at the moment, is that things will have to be decided. It's pretty difficult to make big swinging decisions 6 months out from an election, which is pretty much where we are. It might get punted into the next financial year, but it will not be an easy set of budgets to do. And the other thing that they're doing alongside the budget is the spending review, which is going to cover not just next year, but more as well. So some of the decisions might have to be taken now to give some certainty to other kind of service providers and people who depend on the Scottish Government for funding, like third sector organisations who haven't had any certainty for years. So it will be interesting to see to what extent we see real decisions being taken, or whether the kind of the hard ones are kind of kicked down the road into the next government's hands.
Yeah. Yeah, I can, because I can absolutely see that happening, can't you? I mean, you talk about prioritisation. I mean, that's cuts effectively, you know, unless we're talking, unless it's like massive tax hikes, then it's going to have to be cuts.
Exactly. You know, not everything has to be distributed, you know, cut across the board. There are things that the Scottish Government maybe can decide that they no longer wants to do. Obviously, you know, people who benefit from that might not be very happy, and that's why it's so tricky at this distance to the election.
João Sousa there, the Deputy Director of the Fraser of Allander Institute, the respected Fraser of Allander Institute. That's it for this week's episode of Unspun Live. We'll be back again next week. If you've enjoyed this, please leave a review, subscribe, tell your friends. Thanks very much for listening, and we'll speak to you again soon.